All right, let's talk about fixed versus variable mortgage rates because lately I have never seen this many questions, comments, and honestly, confusion around which option people should be choosing, right? So I want to break this down in a very simple term and clear a lot of noise. Let's start with variable rates. Variable rates are directly tied to Bank of Canada. That's it. If the Bank of Canada raises the rate, your variable rate goes up. If Bank of Canada cuts the rate, your variable rate goes down. It is really that straightforward. Now, that doesn't always means your payment changes right away, but the amount of the interest you're paying does change. And in many cases, the payment will eventually adjust as well. The important thing to understand is that variable rates move quickly. When Bank of Canada makes an announcement, lenders usually adjust variable rates within a day, sometimes even faster. So fixed rates work very differently. When you take fixed rate mortgage, whether it's 3 years or 5 years or 2 years, that rate is locked in for the entire term. The interest doesn't change, the payment doesn't change, and nothing moves. That stability is why many people feel more comfortable with fixed rates, especially during uncertain times. Now, here's where a lot of people get caught off guard, and that's with penalties. If you have a variable mortgage and you need to break it early, the penalty is very simple. It's 3 months of interest. That's it. No complicated math, no surprises. You pay 3 months interest and you move on. Fixed rate penalties are completely different. Fixed mortgages use something called interest rate differential or IRD, and calculation is different for every lender depending on when you break the mortgage and which bank you are with. Penalty could be 6 months of interest, 9 months, or even a year or more. In some cases, it costs people a lot more money to get out of fixed rate mortgage early. That's why flexibility is one of the biggest advantage of variable rates. Another big sources of confusion is why fixed rates can go up even when Bank of Canada does nothing. Fixed rates are not tied to the Bank of Canada at all. They're based on Government of Canada bond yields. When bond yields go up, fixed rates go up as well. When bond yields come down, fixed mortgage rates usually follow. Recently, bond yields jumped fairly quickly, and that's why we saw a fixed rate increase even though the Bank of Canada didn't change anything. Will fixed rates keep going up here? The honest answer is nobody knows. This is the most violent rate entertainment I have ever seen in my career. Rates are moving fast up and down, sometimes for a reason outside of Canada, like global economy concerns, job reports, or what's happening in other countries' bond market. As for variable rates, my personal belief is that there may be still more. As for variable rates, my personal belief is that there may still be some room for rate to come down, but that comes with a risk. Variable rates can change quickly and unaccepted. Economy events can shift things in short period of time. At the same time, fixed rates could also come down again. What I don't see happening in anytime soon, mortgage rates starting with a 2. That's just not a realistic exception in environment. So when it comes to choosing between fixed and variable rate, there's no perfect answer. It really comes down to your comfort level with risk, how stable your income is, and how you plan to stay in home. How important flexibility is to you. People sleep better when knowing their mortgage payment will never change, while other prefers lower penalties and potentially saving that comes with a variable rate. If you're trying to decide which option makes sense for you, this is exactly where a professional advice matters. Every situation is different, and right choice depends on your numbers, not just where rates are today. If you need help reviewing your options or running the numbers, reach out to me directly, and I'm happy to help you make a decision that fits your situation, not just the headlines.